to our page. Okay, recently I got a couple of requests suggesting that I organize a sort of a refresher course. So to that effect, I'm going to be presenting you all with yet another round of FX beginners course. So first of all, you want to really understand what you're going into, and then ask yourself, when somebody talks about Forex, what does it imply? Forex means foreign exchange, the exchange of hard currencies between a willing buyer and a willing seller. They meet in the market and they effect that transaction. Now, I want to explain this in the layman's ideology. I want to bring up the layman's ideology to help you understand what you're going into. Now, let's assume that what's the latest car now? Let's say RAV4 2024 model now, like it comes out and it's being sold, in the market. It's always going to be so expensive, right? However, what happens to that same commodity after some years? You want to understand that depreciation comes into place, and what happens when you now have 2025 RAV4, 2026 RAV4? Then the price of 2024 RAV4 diminishes. Now, in 2026, someone who has bought a 2024 RAV4 decides that, okay, because there is a new model in RAV4 2026, I say, okay, I want to sell mine at this point. And you have another person that still has that same 2024 RAV4, but decides to wait till 2028 to sell off his RAV4 2024. Who do you think will sell at a higher price? Now I'm going to explain it. I'm going to give the ideology again. Now you have two scenarios. For that same RAV4 we're talking about, Mr. A bought his RAV4 in 2024, same 2024 model. Mr. B bought his in 2024, same 2024 model. Then after 3 years, let's say by 2027, Mr. A sold his own RAV4 that was bought in 2020, and Mr. B decides to wait 2 more years to sell off his RAV4. That means Mr. B waited till 2029 before deciding to sell off his RAV4. So there's a 2-year gap between both of them. Now remember that as we elapse time, have more advancement in technology, you want to also realize that you have newer models of that same brand, of that same type of vehicle being produced, like RAV4 2025, 2026 and 2027. So both of them decided to sell theirs. Now I want to ask you, who do you think is going to sell at a higher price? Of course, that question is going to look like a rhetoric question, because you're all going to agree with me that the guy that has sold his in the year 2027, which fortunately was Mr. A, is going to make more money than Mr. B. Reason because of time value of money and the fact that he has realized that over time this commodity will depreciate. So he has already read into the future. He has already taken that opportunity, like, okay, this vehicle the next 3 years is going to depreciate, so I better sell it now so I can sell it at a high price than the other person. So that's exactly what happens in the Forex market. If there's a commodity like the gold USD I've always talked about, talking about Bitcoin, talking about natural gas, so many commodities in the FX market, you want to predict the market reaction. What's likely going to happen to this commodity at the long run? So is it better for you to sell now, or is it better for you to hold on? There are some commodities you want to buy now because they are being sold for cheap, right? And they're going to advise you that you're going to buy it when the price is low, because you are anticipating that in the nearest future, maybe in the next 2 months, in the next 3 months, in the next 4 months, that commodity is going to boom. The value of that commodity is going to go higher. So that time frame we're looking at, like the 1 year, 2 year, 3 years in the Forex market, we're looking at 5 minutes, 1 minute, 1 hour, 4 hours, 1 day, 1 month, 1 week, just like that. But the highest is 1 year. So you want to predict. Now I'll give you another example, another real life example. Now looking at the current price of predict the market reaction. What's likely going to happen to this commodity at the long run? So is it better for you to sell now, or is it better for you to hold on? there are some commodities you want to buy now because they are being sold for cheap, right? And they're going to advise you that you're going to buy it when the price is low, because you are anticipating that in the nearest future, or maybe in the next 2 months, in the next 3 months, in the next 4 months, that commodity is going to boom. The value of that commodity is going to go higher. So that time frame we're looking at, like the 1 year, 2 year, 3 years in the forex market, we're looking at 5 minutes, 1 minute, 1 hour, 4 hours, 1 day, 1 month, 1 week, just like that. But the highest is 1 year. So you want to predict. Now I'll give you another example, another real life example. Now looking at the current price of crude. Of course, crude has sold for about $81, and it's been bullish, like it's been bullish for some years now. Now you want to compare the last 3 years of oil bullishness. You want to compare with the period where the US had Trump as the president. Of course, there are two different scenarios, because when Trump was the president of the US, oil fell to as low as $40 per barrel in the international market. So you want to understand that because of the restrictive policies of Trump as the US president at that time, you had some very, very bearish or depreciating force in oil demand, and to that extent, you had oil falling to as low as $40 per barrel. Now, as an investor, you already knew what happened when Trump was the president, and with the recent political activities surrounding the US politics lately, that suggests or that is likely pitching Donald Trump as favorite to win the next US election. An investor will now compare what it was like when this guy was there, the previous stint he was the president of the US. An investor, you want to begin to imagine that the price of oil will crash, because if this guy becomes president in the next 1 year, definitely he's going to come up with those same policies that were actually not alien to him. Those policies that he brought in during his first stint as the US president that made that commodity crash. So you want to begin to imagine oil price falling the second time. So as an investor, now that the price of oil is as high as $81, and this one, what do? You want to sell, because you're actually believing that if you sell, you're going to make more money selling high. Because by the time, or possibly if Trump gets in there and the price crashes, you wouldn't want to sell at that point, because if you sell at that time when the price crashes, you will be losing, you won't be making money. So that's the overall picture, what we do in the FX market. It's more like you're predicting what's going to happen to this commodity over the next 1 minute, the next 5 minutes, the next 15 minutes, 30 minutes, 1 hour, and the rest of those time frames. So that's exactly what we have for you today. So subsequently, I'm going to be explaining in broader terms the different commodities to explore in the FX market and all you really need to do. So the only thing you're going to do for me is to like this page, so that you're going to be getting live videos, like you're going to be getting the updates as they come. Till we meet the next time, have a good evening.